On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice and it doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners financial advice provider disclosure statement, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Please engage with us. We love to get feedback, questions, and comments on this material, and if you enjoy it, please rate it, or even better, share it with a friend or colleague. G'day team, hope everyone is well. Good to be back. I was obviously away last weekend down in the South Island with the family, so I skipped last week's week ahead. Good to be back talking this week, actually this coming weekend. I'm away again. Apologies, but it's that time of year, isn't it, with the April school holidays and the Easter break. But anyway, we will talk about what happened last week, then we will turn our attention to what is coming up in the week ahead. And it was a much better week last week. Global share markets continued to rebound. We've seen hopes for a de-escalation on the tariff and trade front, fueling further optimism. So the S&P 500 index in the US rose another 4.6% last week. So it is now down 10.1% below its February high. But at one point in early March, it was down 18.9%. So it's recovered about half of those losses that we saw through February and in the first half of March. The gains across other markets were also strong, although a little bit more modest. We didn't see any other market rise to that level. 4.6% for the S&P was very strong. Europe, Japan, and emerging market equities all up almost 3%. The UK was 1.7% higher. The Aussie market was up 1.9%, and the local NZX 50 bucked the trend with a 0.8% decline. But we have been a little more resilient than most in recent weeks, so that's probably not a huge surprise. On the interest rate front, we saw US interest rates slip back slightly. The 10-year Treasury yield finished last week at 4.2%. That's down from about 4.3% a week earlier. And with the Federal Reserve meeting next week, not this week, but next week, markets are very focused on what we see in the interest rate world. No change expected next week, but markets still see some 90 basis points of easing over the balance of 2025. So either 3 or 4 rate cuts expected from the Fed. Here in New Zealand, interest rates little moved. The 5-year swap rate finished the week at 3.5%. Right, the key thing I was watching last week was the April flash PMIs, Purchasing Managers Indices, which are essentially activity indicators. The reason I was watching these closely is because they are basically the very first economic release we get for April. The PMIs always come out before all the other bits and pieces, unemployment or the jobs report or manufacturing releases, certainly GDP, inflation. So it is hot off the press, and it's one of the first indicators we've seen for the month of April. And obviously with Liberation Day coming early in April, it's basically one of the first things we've seen that have picked up any change in sentiment or optimism or pessimism on the back of that. So they were interesting to watch, and they actually held up reasonably well. It was a mixed bag, but they weren't as bad as you might have thought. Composite activity readings in the US, Europe, Japan, and Australia all remained above that break-even 50 level, which points to expansion, but they did all slow from previous levels. Activity in the US fell to a 16-month low, with expectations for the year ahead dropping to one of the lowest levels we've seen since the pandemic. So you are seeing an impact on expectations for future economic activity because of the tariffs. On the inflation front too, there were some worrying signs. Prices charged for goods and services rose at the sharpest rate in over a year, and there was quite a steep increase for manufactured goods, and that is definitely linked to tariffs. So some good and bad news there. It was a mixed bag. The UK PMI was the weakest of all of those other regions above 50, but the UK fell to 48.2. That was actually its worst reading in more than 2 years. So that was the key release for last week. Looking ahead, it is quite a busy week. There will be a lot going on, particularly in terms of economic data releases in the US. We'll have the jobs report on Friday. We'll have the ISM manufacturing index and core PCE inflation ahead of that. We'll also have the preliminary GDP reading for the March quarter, and investors will be closely following the US Treasury's updated borrowing estimates. Those are out on Monday, and then the refunding announcement comes on Wednesday. So lots to keep an eye on there. I think the key thing will probably be the ISM index and the jobs report, because markets will want to know what is happening with the economy and what sort of effects are we seeing from businesses and consumers in terms of tariffs. Are we seeing hiring slow down, that sort of thing? So the ISM manufacturing index is out on Thursday, then a day later the jobs report on Friday. The jobs report will be the key one because the labour market really is crucial to the outlook. So markets expect 125,000 new jobs to have been created for the month of April. That'd be down from what we saw in March. The unemployment rate expected to remain unchanged at 4.2, but we'll be watching for any signs of cracks appearing. One note of caution: while this is a very high profile release, while it will be watched really closely, March and April can be quite volatile in terms of the numbers. You've got the Easter holiday, you've got spring break for schools, and you often have weather disruptions at this time of year. So there could be some swings and roundabouts in that jobs number, but that'll be out on Friday, so we'll get it Saturday New Zealand time. A couple of days earlier, you'll get that ISM release. Also, the inflation report, PCE inflation, kind of old news because we're all looking at the tariffs and thinking they're going to push inflation up. But after the CPI inflation report was lower than expected, people are expecting the same thing here. So markets see the headline PCE inflation rate flat for the month, the core PCE rising just 0.1% for the month. And on an annual basis, that would see headline PCE inflation slow to a 6-month low, 2.2%, and the core PCE inflation rate at 2.6%, which would be the lowest in 9 months. So all very good news and positive. However, I think like that CPI report, the markets will probably look past this because they do expect upward pressure on prices in the months ahead because of the tariff. So that is what we're seeing in the US. On the central banking front, we've got the Bank of Japan. They will be the highlight of the week. Their latest monetary policy decision comes on Thursday. Now, the BOJ has been tightening monetary policy after a long period of negative interest rates, but I think they'll be on hold this week because the outlook is quite uncertain. They have been recovering in terms of the Japanese economy, but we've seen signs of weakness with some of these trade policy changes out of the US, and Japan is a very export-driven economy. So markets had previously expected the next rate hike to come mid-year, but now people see that coming late in the year. So no change expected, but I think you will look for some comments on currencies as well. The US dollar is down about 10%, more than 10% actually, against the Japanese yen since January. So we've seen money moving out of US assets and into other parts of the world, and that has seen the yen benefit. The yen, a traditional safe haven currency, so if people are wanting to have a few less US dollars, then they might look at the yen and the euro and the Swiss franc. So the US dollar is at its lowest level against the yen since September last year. So maybe some of the comments will be interesting from the BOJ, even though you don't get a rate hike as some might have thought we might be talking about by this point in the year. Here in New Zealand, the highlight will be the ANZ Business Outlook survey for April. This is out at 1 o'clock on Wednesday. Last month, confidence slipped a little bit, but it's still well above the long-term average, not far off that 10-year high that we saw in December. The own activity measure, which is the part that I watch closely, that's usually a very good indicator for where growth is headed. That increased to a 3-month high last month, hit 48.6. but less positively. Just like we're seeing in the US, there were some signs of inflation. The net proportion of firms intending to raise prices in the coming 3 months, that increased to 51.3%. So that measure is actually at its highest level in almost 2 years, and it's risen for 8 out of the past 9 months. So we've got to keep an eye on that. There's another measure in the survey that looks at cost pressures, and that lifted to an 11-month high. So businesses are still seeing cost pressures out there, and that means they will do their best to pass those on to consumers. And as the economy recovers over the second half of this year, on the back of those OCR cuts that we've already seen, and there's a couple more to come, you might see businesses try and use that slightly stronger economy to push some of those cost pressures that they're facing onto consumers, and that would be inflationary. So just something to be mindful of. So that's the wrap of economic releases out there in the world and here in New Zealand. On the political front, there's a little bit happening globally too. In Canada on Monday, we've got the federal election. So the ruling Liberal Party, led by Mark Carney, Prime Minister, they have had a healthy lead, but recent polls have shown that their advantage has been shrinking. So we'll be watching that on Monday, Tuesday in New Zealand. Also in North America, but in the United States, this Wednesday will mark President Trump's 100th day in office. So that's a bit of a stake in the ground in terms of some of the things that he would have wanted to achieve in those first 100 days. And in the UK, we've got local elections happening on Thursday. So a few things to watch too. Very busy week coming on the global earnings front, with about 180 S&P 500 companies due to report results this week, including 4 of the so-called Magnificent Seven. So we've got Meta, that's Facebook, Meta and Microsoft on Wednesday. That's US time, so it'll be Thursday New Zealand time. And then on Thursday US time, so that'll be Friday New Zealand time, Amazon and Apple. So Meta, Microsoft, Amazon and Apple. They're not the only ones. Plenty of other big heavyweight names, and not just in the US as well. Some across the Atlantic and Europe. We've got Domino's Pizza, we've got Schneider Electric, Adidas, Coca-Cola, Ecolab, Spotify, Visa, Caterpillar, CVS Health, Eli Lilly, Chevron, ExxonMobil, Shell. A lot of people still follow the oil companies, so lots going on. It's been a reasonable reporting season so far. We're about a third of the way through it in terms of S&P 500 companies having reported. So about a third of the way through, about 50% of companies have beaten sales estimates. In terms of earnings estimates, the numbers look a little bit better. We've had 75% of companies exceed earnings forecasts, so that's not too bad. And right now, the annual earnings growth rate for the quarter, compared to the same quarter a year earlier, is sitting at a pretty healthy 10.1%. So it hasn't been too bad, but we'll see how things go this week. It's quite a busy one, and obviously the holidays are behind us now, so it'll be the first 5-day week. Should be a little bit busier than we've seen over the last few weeks with Anzac Day, with the Easter holidays, with the school holidays. I think the local market, the Australian market, should be a little bit busier this week. So that will be interesting to see whether the gains that we've seen recently continue. Lots happening on the economic data front in the US, with the GDP report, PCE inflation, the ISM index and the jobs report being the big one. Also news on those Treasury spending plans, borrowing estimates I should say. Trump's first 100 days, Canadian election, business confidence here in New Zealand, and not far off 200 S&P 500 companies reporting results, including some of those big heavyweights like Meta, Microsoft, Amazon and Apple. So there you go. Enjoy your week, team, and we will talk again soon. Thanks for listening.
For more insights, visit craigsip.com.